Hey guys, Mark with Think Insurance, and today we're going to talk about the 6 things that can increase your insurance rate and how can we fight back at those pieces. If you're new to the channel, I appreciate you guys checking me out. If you've been here a while, let me know. I got a new shirt. I've put it in a couple videos. I'm going to try to rotate a few different shirts around so I don't have to constantly have different clothes that I have to buy. I can wear like the same things over and over. Let me know in the comments below if that's even a thing, or if you're like, hey, this guy's wearing the same shirt, I'm not going to watch him. It would be kind of silly, but it is a thing. Also, I've got a little bit of a mess in the background. You can't see it because we blur everything in these lenses, but it's kind of a cool thing. You may already start watching this, but it's an insurance thing that I'm doing that's actually going to be in Michigan. So it's kind of like an agency that I'm working towards and working on. So there's all the equipment and stuff. If you want to know more about that, I'll put a link to the company that I'm working with. So the number one thing that is going to raise your insurance is getting a ticket. Most people just think of speeding ticket because 8 out of 10 times that's what it is. But there's about 100 different tickets that you can get, and they all play different levels and different factors. Speeding is the most common, but even the speeding ticket has several levels. You've got speeding below 5 miles an hour, speeding above 10 to 15, speeding 15 plus, and then you get into reckless driving after that. So the less than 5 and the less than 10 are going to be the same in insurance. It's going to raise your rate a little bit, partially because it's raising the risk of you having an accident. So if you're willing to go faster than you should legally go and you're caught doing that, then the insurance automatically handles that risk a little bit differently. If you go 15 miles or more over the limit, now you're on the highway and there's likely, if there is an accident, if a tire popped, if something happened, the risk is really high for an accident in that case. There's also the DUIs, there's the following too closely. That's things that can cause the risk. If the person stops too fast, you're going to hit them. There's all these pieces of those tickets that tie into the risk of the insurance, and that's going to increase the amount that you pay. The second one follows right behind is when you cause an accident. In some states, when you don't cause an accident, but you have one, it still counts against you. So it depends on the state that you're in. We'll use Texas as an example because they're the ones that count not at fault claims against you. If you file a claim in your insurance, that just raises the cost and they increase your premium. Now, it's not as major as if you had an at-fault accident, but in most states, if you have an at-fault accident is when that's going to increase the premium. If you had one, there's a good chance that something may occur again and the risk just goes up. You're looking at about a 15 to a 30% increase whenever you have an at-fault claim on your record. A subcategory to that is if you're in a state that doesn't count those not at fault claims against you, be a little bit careful because it usually allows the first one to not be counted. Whenever there's a second claim, even a comprehensive claim, when they have 2 claims or more, the state usually allows the company to go back to the first date that that claim was. And if it's in that time period or the grace period, typically 3 to 5 years, those are the 2 that most states choose, they're going to be able to rate against that. That's why you see those not at fault claims do affect you once you've had enough of them. Another thing that people don't realize, and I've commented a whole bunch on this channel when people ask me on my claims video, which I'll link here, is why is my insurance increasing when it wasn't my fault? Even in the states that are the not at fault ones where they don't count them, they can go up. It's because the companies that you're with, some of them offer a claims-free discount. And if you're getting that discount, you're paying a lower premium today. If you have an accident, then you lose that claims-free discount. They're not penalizing you for the accident. They're taking away the discount that you were already getting. Now, the only way to fight back at that is to check different options. There's a lot of places to shop when you're going between these because you're no longer a fit for that one company when the rates go too high. What I personally have done, and what I've told a lot of people on this channel, is you really got to check out Cover. Cover Insurance is one of the best ones that I've seen so far. It's the easiest one. The biggest thing that I like about it is not so much even the app, even though it's really cool. It's the fact that they don't hassle you. You fill out a quote, it checks 30 plus companies, it gives you the best rate. If it can't give you a good one, it tells you who's going to be the next best one to check, and then that's it. They text you once and say, do you want us to talk to you? And you don't have to talk to them. You can buy it right there, or you can say yes, and now you're talking to a live local agent where you can actually get that information and change the things around to be whatever you want it to be. If you guys are interested, I'll put a link to cover it below. They are not sponsoring this specific video, but they are a channel sponsor. I've partnered with them anytime that I see a good spot where I think they would fit. And in this case, whenever you're checking and shopping, Cover's really going to have the biggest array of companies that you can check without having to answer the phone 30, 40 times because people sell your information over and over and over, and it's just annoying. Number 3 is moving to a more dangerous neighborhood. Now, this has changed. This actually in the last probably 12 to 24 months has actually evolved into what we call territories. It used to be zip code based. Some states still allow this, but in the majority, they've eliminated the individual zip codes. Kind of sad for the agents because they could pinpoint zip codes that they wanted to market to, but in general, the state now has said, no, you can't just pick this zip code where across the street, the other zip code is a higher risk. The zip codes now are considered territories where it's a bundle of areas that are compiled into one. So sometimes the better place is covering up for the lower place. The risk reason that this is causing your insurance to go up is not necessarily because it's going to have more accidents, even though that's the majority of the time of what it is there are larger accidents and more often accidents. It's also the insurance is covering your car in most situations when you're not driving the vehicle. Is there a lot of theft? Is there a lot of vandalism? Is there a lot of claims coming through in that zip code or that area or territory? And are they having a lot of payouts? If that's the case, then that zone that you're in is going to cause your increased rate. Number 4 is buying a more expensive car. This really has to do with the repairs. And I'm going to answer the question that you probably have already asked for those that don't carry full coverage, is why does mine go up? The first part is the repairs. If you have a vehicle that has a nicer vehicle, it's usually going to cost more to repair that vehicle. In a lot of cases, people want the OEM original equipment parts, original equipment manufactured parts, and that allows them to have the better pieces. In my opinion, it doesn't really matter. Most of the time, Napa makes as good of a part, but if you're that type of person and you want the Lexus piece to be a Lexus piece or the Mercedes piece to a Mercedes piece, then that's the case that you get to choose. That's usually an add-on feature that you can add to your policy. The more foreign your car is, the more likely that they're going to have to outsource to get those parts, and the cost of your insurance is going to go up. To those that don't carry full coverage, not having it also is still a risk. Not that you're going to get it repaired, it's because sometimes the vehicle has a performance factor to it. So having a nicer car is usually listed in the performance category. So it's not the cost of the repairs because you don't carry the full coverage, it's the cost of the vehicle's risk there. Also, the territory you're in still plays that factor because if there's a lot more performance vehicles, a lot more costly vehicles in your area, there's a good chance that the costs will be higher. The 6th way, and I think is probably the biggest reason rate insurances are going up, is credit score. It's called an insurance score. I'm going to link a video at the end of this video that you've got to watch that talks about the insurance score more in depth, tells you exactly what they're rating for. Insurance score is similar to credit, but it mixes a whole bunch of stuff together. What I see more often than not is a rate will go up because in that area, the company has reran your insurance score. And your insurance score could have changed due to credit or location or anything that's changed in that area. There's a reason they reran it. It's because there was a risk that they noticed in that area, and they're going to pay the money to rerun those motor vehicles, those clue, those insurance scores against that whole spot. They're not picking on you, they're picking on the area that they think the risk has changed. And the 6th and final reason is your household. A lot of people don't understand, and this is where most people commit insurance fraud unknowingly because they usually don't know this is a thing, but is your household, the number of members and their risk profiles play a factor. Most states don't care as long as they've got their own insurance and their own vehicle, but let's say they don't. They live in your house, they don't have a car, they have access to your car. Oh, but they're never going to drive it, you say. How many times has insurance paid out a claim where the vehicle was taken from them, happens to be the roommate, got into a car accident, gets covered, the insurance pays those premiums out, and who's lost with the bill? The insurance company. What does that do? That raises the risk. If you have people in the house, it's going to require them to either exclude them or add them to your policy. I have a video on that you guys should watch. I'll put it in the description below right by that cover link for you. But what I would do next is I would learn about the insurance score. If you want to learn more about the insurance score, go ahead and watch this video here where it's going to go in depth on the 4 to 5 pieces that the insurance score actually plays a factor and affects the actual policy and the price that you pay. It'll show you how to fix it. Go ahead and check that out. I'm Mark with Think Insurance. I'll see you in the next one.